Welcome to the Killik & Co podcast, the 14th of July. Well, as you can tell by the screen behind me, the anticipation is this week we're going to have quite a busy week. It's the beginning of the Q2 reporting season in the US, and around 59 constituents of the S&P 500 will be reporting. It tends to be the banks first. We had Wells Fargo numbers out on Friday, but many of the investment banks will be reporting during the course of this week. Those highlighted in black, well, that are ones of interest to us. Yum Brands, the restaurant chain, many of the high-profile US restaurants that are expanding into the Far East and into China. They report. We'll also have numbers out from eBay. And on Thursday, Google is of particular interest to us. These numbers are the Q2 numbers. Google shares trading just shy of the $600 at the moment, and plays to the major theme of the Internet of Things that we've been discussing quite recently. In the UK here, we have Breedon Aggregates. This is the AIM-listed company. The aggregates play that we put a buy now as part of our thematic approach towards UK construction and house building. On the economic front, well, a lot of the really central bankers are speaking this week. We have Janet Yellen speaking tomorrow. She is due to be discussing the current environment. That's perceived to be a dovish tone that she will adopt. Mark Carney also will be talking tomorrow, seen as a more neutral given his recent stance and indications that interest rates in the UK are going up sooner rather than later. And the other really key information that I'm looking forward to this week is further evidence of the inflation situation both in the UK and also in Europe. It's the inflation data recently that has been causing some concern to the ECB and triggered their recent move towards sort of a more accommodative monetary policy. So that will be out during the course of this week. Let's just look through some of the charts. Well, equity markets last week had a relatively poor week, having endured really now 8-10 weeks or so of reasonably flat line trading. We saw sort of quite a marked move to the downside. It was exaggerated through Europe. So if the UK was down 3% at worst over the course of the week, we saw further losses in Europe. It was largely driven by developments at Banco Espirito, the Portuguese bank. Concerns over the financial health of its parent company caused the company to witness somewhat of a share price crash, the share price halving during the course of the last couple of weeks, and it has resulted in some short selling bans in that bank. It did cause a wobble through some of the European stock markets, and so it was largely sort of settled by the end of the week. And as we start the new week, equity markets are putting a little bit of blue on the screen, and we're seeing a little bit of upside, so hopefully past the worst with regards to any European worries. Currencies continue to remain of interest. I was particularly taken by the very poor manufacturing and industrial numbers that we saw throughout Europe last week, particularly in France, but also in Italy, and indeed even here in the UK. No obvious signal as to why we missed by such a large scale during the course of June, but one wonders whether currencies are playing an impact here. We know that in the rebalancing of the UK economy, exports have proved to be the one area that we would like to see grow, and indeed saw some evidence that it was doing so. It was largely being assisted by the fact that the UK currency had dropped back from €1.50 or indeed $2 at the beginning of the financial crisis, and maybe had lost somewhere between sort of 20 to 25% at the worst. But the recent strength in sterling, maybe that's just taken away that little bit of competitive edge and seeing itself manifest in some disappointing data. So this is the chart. We can see here that the pound against the euro just rolling over a little bit to the top here, and against the dollar likewise. Nothing too dramatic at this stage, but it is being quite closely watched by the markets. Mentioned Google. This is the stock that, as I say, reports on Thursday, nudging up towards that sort of high level of $600, 586, report out Q2 on Thursday of this week. Rio Tinto, I just want to sort of continue the sort of theme of miners because whilst very much out of favour at the moment, and Rio Tinto will have a production report later this week in iron ore, it is that relative performance of mining versus the rest of the market that is just intriguing me at the moment, whether there is money coming into this sector. You can see the bounce back in Rio Tinto shares having endured a pretty large underperformance during the course of 2014 so far that is interesting me. It's just a sort of relative tactical trade that I think is assisting the miners. That Q2 production report should be critical to this week's trading. We've launched a new theme, which is solar. Very interested in the whole dynamics of energy at the moment. Certainly over the next few years, we think energy will play an increasing role in investment themes as the traditional forms of energy are becoming very expensive for the households, and the stability of supply always under question, where you get some of the sort of political uprisings that we've seen of late. And solar is coming through. Solar has been around for a long time, back to the 1940s, but it really is the sort of economics of scale now that is beginning to make solar an attractive area for investment. Really not say too much more at this stage, but we have got a thematic note giving a lot more detail about solar energy. SolarCity Corporation, the US market leader, is our preferred choice in that sector. Has had a pullback from the sort of $72 back to $65 of late, and I would encourage you to take a look at that note if that's an area of interest for you. Just going back to some of those European stock markets, really just highlighting the sort of weakness that we saw last week, exaggerated certainly more through the European markets. This is the Euro Stoxx 50, so covering sort of broad range of European markets. I also want to highlight just Tesco. Tesco has nudged its way back down to £2.80. It indeed dipped below £2.80 last week. Which is a sort of new 2014 low. A few little buy notes coming up this morning. I saw Cantor Fitzgerald have issued a buy note on Tesco using the sort of low valuation, but it's very much in value territory at the moment, and not many sort of supporters out there. But back on a 2014 low, it's just sort of creating a little bit of interest, maybe for a slightly more positive outlook for the shares. And really just a sort of final look at some of those sort of key macro charts. FTSE 100 having sort of shied away once again from this sort of critical level of just sub 6,900, coming back to 6,700. We're seeing a little bit of a bounce back this morning, but it really is still struggling to get through that core level. The Banco news last week just disrupting the FTSE 100. And 10-year yield, really quite a sharp reversal in fortunes for the 10-year yield towards the end of last week. I think the employment data that we saw 10 days ago in the US was quite encouraging, and indeed started to see yields push up towards 2.65, 2.7% temporarily. But it's been very much bought into recently with concerns about European stability around that bank. So we're back down on the lows of sort of 252 there at the moment, and the equity market responding to it. So really just keep half an eye on that chart as it's displaying pretty much a two-way pull at the moment, and no discernible trend as yet. But when it does break, I think it will be quite indicative for equity markets going forward.